Ladies and gentlemen, good day and welcome to Kirloskar Brothers Limited Q2 and H1 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinion, and expectation of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Kirloskar, Chairman and Managing Director of Kirloskar Brothers Limited. Thank you, and over to you, Mr. Sanjay Kirloskar.
Thank you. Good afternoon, everyone. I hope you can hear me.
Yes, sir, you're audible. Go ahead.
Yeah, thank you. On behalf of Kirloskar Brothers Limited, I extend a very warm welcome to everyone for joining us on this call today. I hope you've had the opportunity to go through the financial results and the investor presentation, which have been uploaded on the stock exchange and on the company's website. I'm pleased to report that during the quarter, consolidated revenues grew by about 6% to 913 crores, and EBITDA grew by about 46% to 97 crores, with EBITDA margin at 10.6% and an increase of approximately 290 basis points. For H1 FY24, consolidated revenues grew by 10% to 1813 crores, and EBITDA grew by 85% to 213 crores, with EBITDA margins at 11.7%, an increase of 480 basis points. I'd like to highlight that the growth in the EBITDA outpaced revenue growth on the back of strong performance in international business, cost control initiatives, and softening of material costs. For the half year, our domestic business grew by 8.5% and international business grew by 12.5%. Oil and gas, fire and defense and marine industries continue to witness growth. In addition to the ongoing strong demand for made-to-order and engineered-to-order pumps, we've also observed a notable increase in made-to-stock orders. This is a positive indicator of our ability to meet the diverse needs of our customers. Looking ahead, we expect this growth momentum to persist in the coming quarters, primarily due to the strength of our order book. For the recently concluded quarter, we maintained a consistent upward trajectory in our consolidated order book, which reached 3,084 crores, representing an 8% year-on-year growth. This growth in the order book was predominantly driven by irrigation, water, and building and construction segments, highlighting the increasing demand for our products and our strong market presence. I'll now request Alok Kirloskar, Managing Director of Kirloskar Brothers International BV, to share his thoughts on the performance of the international business.
I'm pleased to report the international businesses, which we refer to as KBI BV, witnessed a growth of 4% in Q2 FY24 and 15% in H1 FY24. Most of the international subsidiaries witnessed a healthy growth on the top line, along with expansion in operating profits. STP UK and STP USA witnessed marginal growth on top line. However, on the operating profitability side, both these subsidiaries witnessed strong performance. The UK business, as previously mentioned, we're looking to reshape our business mix. Our aim is to increase the share of services. Therefore, we're shifting our focus on the service side of our operation, which offers greater margin. Currently, the breakdown of our product to service mix stands at 62% for products and 38%. On the product side, we primarily serve the water supply, firefighting, oil and gas, offshore, chemical and industrial sectors, which make up 60% of our business. We are committed to exploring cross-selling opportunities. The STP UK operates on a global scale, with 70% of local UK production being exported, serving customers in various regions. In line with this, I just want to highlight that last year in July 22, we moved to hedge accounting. The US business has recently introduced many new products. We have a special emphasis on the fire segment for data centers. These products have performed quite well, and we've gained recognition from major players like Google, AWS, and Microsoft for our specialized offerings. Our focus in the US is primarily on fire pumps, municipal water, and pumps for commercial real estate. While there are investments happening across various sectors, we remain focused on these. It's important to note our US operations are centered around commercial real estate, and municipal water. Unlike other regions, there is no service component in the US business. The Dutch business continues to go through its restructuring exercise. We have mainly retained the water supply and services part in the Dutch entity, along with the Kirloskar brothers trading entity. The other parts of the business are being restructured and aligned to other businesses within the international group. Our South African business is performing well. South Africa has signed further framework contracts in the power and mining sectors for services. Overall, the business is doing well on the operational financial side. Thai business, as we said last time, we are continuing to follow a model very similar to India by looking to add more distributors in the region. Our focus is on real estate, fire, and industrial sectors, which are the key sectors that we look to grow our business in going forward. Furthermore, our international business has made significant investments in services and framework service contracts. Currently, we have over 100 active long-term framework contracts across all our international subsidiaries. We remain committed to expanding aspects of our business in areas like AI, IoT, and AR, and capitalizing on our 3D printer capabilities to gain a competitive edge. Our overall strategies and top priorities are directed towards strengthening our offering and extending our geographical reach and expanding our market share. With this, let me invite Ms. Rama Kirloskar, General Managing Director, KBL, and MD, Kirloskar Limited, to take you through the performance of the domestic business.
Thank you, Alok. Our domestic business is witnessing continuous traction. The industrial market is witnessing strong growth, and we are seeing a lot of orders. We have indeed secured a substantial number of orders for both Kirloskar Brothers and Ebara, indicating a strong demand in the market. However, one of the challenges we are facing is a limited number of vendors available to meet this growing demand. However, the situation is coming under control, and we expect things to normalize soon. In the small pumps business, we've experienced a 7% year-over-year growth during the first half, FY24. In water and irrigation, we have successfully secured orders for over 1,000 solar pump sets. We've obtained contracts for more than 80 vertical turbine pumps and won orders for over 100 split case pumps. We've also gained more than 200 multi-stage pump contracts for various water supply projects. In the power sector, we successfully commissioned 2 horizontal Kaplan turbines for the State Electricity Board. In building and construction, our firefighting pumps were chosen for installation in the prestigious new Parliament House. Our HVAC pumps were selected for the largest convention center in Asia, Yashobhoomi. Customer service support sector demonstrated a remarkable 11% increase in sales compared to the same period in H1 FY23 year-on-year. In the engineering service division, we have experienced substantial growth with a 22% increase in sales compared to H1 FY23 year-on-year. As far as oil and gas sector is concerned, we witnessed a robust growth with a 7% increase in year-on-year sales during H1 FY23. These positive results are a testament to our dedication to innovation, product quality, and customer satisfaction. With this, let me invite Mr. Chittaranjan Mathi, our CFO, for the financial performance highlights.
Thank you. Good afternoon. Let me start with consolidated financial performance highlights. For Q2 of the current year, net revenue from operations grew by 6% year-on-year to 913 crores. EBITDA grew by 46% year-on-year to 97 crores, while EBITDA margin expanded by 290 basis points to 10.6%. Profit after tax grew considerably by 66% year-on-year to 51 crores. For H1, net revenue from operations grew by 10% year-on-year to 1,813 crores. EBITDA grew by 85% year-on-year to 213 crores, while EBITDA margin expanded by 480 points to 11.7%. Profit after tax grew considerably by 148% year-on-year to 115 crores. Now coming to standalone performance for Q2 for the current financial year, net revenue from operations grew by 0.6% year-on-year to 595 crores. EBITDA grew by 33% year-on-year to 62 crores, while EBITDA margin expanded by 250 basis points to 10.5%. Profit after tax grew considerably by 71% to 35 crores year-on-year. For H1 24, net revenue from operations grew by 4% year-on-year to 1,176 crores. EBITDA grew by 56% year-on-year to 121 crores, while EBITDA margin expanded by 350 basis points to 10.3%. Profit after tax grew considerably by 141% year-on-year, 69 crores. This is from our side. We can now begin question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sunil Kothari from Unique PMS. Please go ahead, sir.
Thank you, sir, for the opportunity. My hearty congratulations, Sanjay Bhai and team, for achieving now a very reasonably respectable margin, which you are trying by cost efficiency, removing some non-profitable business and products. Really commendable job. Sir, my question is to you is two. One is on just macro view. We are hearing a lot of engineering and industrial products, projects and products ordering going up. So your macro view will be very helpful. And just last question is on to Sanjay Bhai. Basically, now we have done reasonably good consolidation in terms of our cost and profitability. So when we should think about you also going, KBL also going at a really respectable rate. I am not asking any rate, but maybe double digit, higher or lower double digit. That's my question. Thank you.
So as far as we are concerned, we are participating in all the projects that you can see in the different sectors, whether it's irrigation, water supply, industry, which is the new investments that are taking place in steel or all these sectors of the economy, which is handled by our building and construction sector. We're also seeing a large order booking. So we are basically getting large numbers of orders for our business from different sectors of the economy.
Right.
And as far as the numbers are concerned, I think I will ask Mr. Mate to explain the way the numbers have played out so that there's better understanding for all of us.
Okay. Kothari, our first was a double-digit margin, you were saying, no?
Yeah.
Yeah.
Which already we achieved, yes. Now I'm trying to understand, focus will shift to growing revenue growth little bit higher because our competitor, other industrial products are growing that way. So I'm just trying to understand how is the scope, and particularly I think nuclear exports and this railway is helping a lot to grow the people, the other players. So your thought process, I'm qualitatively trying to understand the growth possibilities and our preparedness.
So in different sectors, of course, we are growing. I think even where government is involved, we take orders where we are sure about proper cash flow and that the projects move like we would like them to move. And we are more conscious of cash rather than top line.
And Mr. Kothari,
Yeah.
one company out of those some companies who have declared their results have registered growth, what you are talking about, a high double digit. But on the contrary, there are other companies which have shown negative growth. And that is because in both sides, where it is high growth and low growth, high dependency on a government project order, whether it is for nuclear or solar pumps. Suddenly there is a growth, suddenly there is a fall. And as our CMD sir explained, we are more focused on steady business where profitability and cash flow is ensured and not a big government project order.
Thank you, sir. Thank you very much.
Thank you very much. The next question is from the line of Mahesh Bendre from LIC Mutual Funds. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, last 3 quarters, our standalone business is growing in single digit, and for this quarter, it was almost like a flat. So, if we see around, one of our peers.
Sorry to interrupt you, Mahesh. Mahesh, could you speak a little louder? You're not audible to the management.
I'm audible now?
A little better, but I would request, are you speaking from a speakerphone?
No. From handset only.
Yeah, because your voice is sounding at a distance right now. We can hear you, but it's audible, but it's faint.
Okay, I'll try my best. Okay.
Sure.
So, sir, on a standalone business, we have been growing in single digit for last 3 quarters. And for the last quarter, the growth was almost flat. So, if we see around our other peers, they have been growing 20% plus for last, if I look at for last 9 years. So, where the growth is missing? Why we are not growing with a higher rate?
Could you repeat your question? Sorry.
Sir, last 3 quarters, our standalone business is growing in a single digit. In fact, last quarter, the growth was almost flat revenue growth. So, if we see around our largest peer, which is growing 20% plus for last 3 quarters, so just trying to understand where are we missing in terms of these two different.
I believe that where they are getting their business from is possibly FGD, that fluidized gas desulfurizer. That could be one strong driver of their growth. And I think they've been talking about their nuclear business, so maybe there have been some shipments over there.
Okay.
But like Mr. Mate said, that's the only player that seems to have that kind of growth.
Sure. So in terms of outlook for next year, do you think that given the current order book, we will grow in double digits in the standalone side?
We have, I think, an idea of what the order book is, and both on standalone as well as consolidated basis. And most of the orders are to be executed in the current year. And that order book doesn't include the made-to-stock pumps, which is a large proportion of our business.
Okay. And the last question from my end is operating profit has been stabilizing. So is there any further case for us to, there is any potential further to improve those, or are we stabilizing what they currently are? Maybe a small difference because of the efficiency.
As we have always said, we will strive to increase the profitability quarter on quarter.
Sure. Thank you, sir.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Akshay Mokshe from Axis Securities. Please go ahead.
Hi, good afternoon, sir. So my first question is on the Concall level. we have seen a significant increase in the employee cost. So what was the reason for it first? And secondly, will we see the same trend in the H2 of this year?
As far as employee cost, first I will cover KBL standalone and then come to other companies because your question is consolidated.
Yes, sir.
In KBL, there are two factors. There were wage settlements at all the plants, so that has an effect. That is a one-time effect, and part of it was the wage arrears, and part is increase in current wages. The second part is after Corona, everywhere in manufacturing industries and other software consulting, there is an attrition rate. So we have to be at par with industry. So we had to rationalize our salary to control the attrition rate. And on overseas companies also, after Corona, whatever the growth they are anticipating for that, they have to rationalize manpower as well as scale.
Hello, Akshay. Has that answered your question?
Hello, sorry, sir. So will we see the same trend in the H2 as well, sir?
Whatever is the one-time effect for paying arrears, that is that will not be repeated in subsequent quarters. But wherever the salaries or wages have increased, it will. So part of the increase what you see in Q1 to Q2 was one-time thing. It will not be repeated.
Okay, sir. So on the order book front, which all are the sectors which show capability to grow further?
Which sector?
Yeah. So which are sectors are you seeing any more demand from the power sector or say defense sector?
We are seeing better demand from the power sector. We are seeing better demand from the oil and gas sector, industry, what we call our building and construction sector.
Okay. And which would be the lowest performing sector among all of the sectors? Like the number of inquiries must have dropped, something like that. One of the sectors which has reduced its demand.
No, that we are not seeing any reduction in demand. There are some that are lumpy, like defense and marine, where suddenly you might get an order. Again, I think in power sector also tends to be a little lumpy. But the order board, as far as the company is concerned, is higher across the board.
Okay, sir. Okay, thank you so much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and want to ask a question. The next question is from the line of Anish Jubalia from Girik Capital. Please go ahead.
Hi, good evening, sir. Hope my voice is audible to you. So my question is around the order inflow that we saw in H1 at the consolidated level. So if we compare to the last year H1, we are almost flat in terms of the order inflow. So can you just, if possible, try to give some understanding of whether we are seeing a reduction in the momentum versus the last year? Because in the last year we grew our total consolidated order inflow at 17% for the full year. So would be very helpful to know if there was any one-time big order in the last H1 base or there is a slowdown in the momentum.
Are you talking about order board or top line?
No, I'm talking of the order inflow, sir. Order inflow. Yeah. At the consolidated level.
orders tend to be, looking at our kind of our business, tend to go up and down quarter on quarter. So I suggest you don't get carried away by one quarter.
So we can just take this away that there is no slowdown in the momentum in the business in terms of the order inflows, right? Even though H1 could be probably benign from the numbers perspective.
Yeah.
In fact, if you see overseas orders,
yeah, they are up by 20%, but the standalone is down by 9-10%.
It has gone to 330, so there is a 15% growth if you see Q2 year on year.
Yes, sir. Yes, sir. So obviously, I can see that there is a yeah.
Basically, we saw pent-up demand in the previous year, so
Okay.
that resulted in some of the sectors suddenly having a large order board because even things like real estate started picking up. So there were many orders that have come in. So I think you should let it see it over the course of a year.
Okay. That's really encouraging to hear. Secondly, sir, even the MTS business, I think you have provided the numbers. In H1 we have grown by 7%. Versus the 15% in the last year. So it would be very helpful to know, about the same, that whether the momentum is picking up over there, or how should we think about the business growth going forward. So I think in the presentation you have given that the MTS has grown by 7% in H1.
Yeah, no, so, there were certain areas, as we had said earlier, we are trying to enhance our market share quite aggressively in certain regions. And we did notice that certain markets in the country were down in the last quarter. But we do expect to have them revived shortly in coming quarters. So the sales will pick up shortly.
Okay. If I can just ask one last question. So if you see the revenue execution, right? So what has turned out is that we saw a revenue growth of 10% in H1 versus the last year. But if you look at the FY23 order book end, was up by 17% versus FY22. So again, we are seeing that the execution of the existing order book as of FY23 end also is not getting completely converted into revenues. Means probably we can expect to see even a 17% growth in H1 also, right, versus the last year, given that the order book itself was up by 17. So is there anything to note down over here that the execution itself is also slowing down because of some reason?
Has a long delivery period. Hello.
Yeah.
Your order board you see which consists of various sectors, but there are certain sectors where the delivery period is long. So even if you see the opening order board is there at the beginning of the half year or quarter, not necessarily everything would get converted into revenue, because we have different products. Some are delivered within 2 to 3 months, whereas there are oil and gas, irrigation, power, where delivery period is even 10 months, 12 months, and in large power projects, even 2 years. So the healthy order board may not immediately reflect in the same revenue growth in that coming quarter.
Okay, I'll just follow in the queue. Thank you. Thank you and all the best.
Thank you. The next question is from the line of Kunal Sheth from BNK. Please go ahead, sir.
Yeah, hi, sir. Thank you for the opportunity. So my first question is pertaining to the standalone business. We have grown, flat this quarter, and we did mention that there are some peers have grown very fast, but some peers also have grown quite slowly. So, sir, what can you give us some indication what would be the market growth in the current quarter would it be right to assume that market was flat or, maybe 1%-2% growth, and therefore we are in line with the market growth? Is that the right way to look at it?
Market trend.
Yeah, I think that would be the right way to look at it.
Okay. And sir, what would you attribute this slow growth in the market to be, specifically in this market segment? Because in most of the other market segments, and when I mean other market segments, I essentially mean other industrial products, the growth seems to be quite reasonable. So would you attribute, and you did mention that you are focused on cash flows. So are you seeing any delayed payments or execution in any of the projects, or how should we think about this, sir?
So there are a couple of reasons. One is there have been, number one, there is a change in the product mix. So there are more orders that take long lead time, which is why it's not really comparable from last year, same time, same quarter. Second is there were floods in certain parts of the country, which is why we did not get a response from certain customers. And third is some of the inspection activities were delayed, which is why we have certain orders that are ready but not dispatched.
Okay. Got it. And as far as the order book is concerned or our order flow is concerned, there also we have seen some degrowth. So like Sandesh mentioned, we should think about this as quarterly variation, but the order inquiry pipeline is healthy. Is that right to assume?
It is.
Yes.
Okay. And Rama, a question to you. How should we think about the growth in the standard product business from a medium-term perspective? Is it a 10%, 15% growing market, or it is more like a single-digit 7-8% growing market?
I'm sorry, your voice is a bit muffled. Can you repeat that slowly?
Sure. I was just referring to how should we think about the growth in the standard product business? Is that market 8 to 10% growth market, or is it a 15% growth market?
So that is an 8% to 9% growth market, to answer your first question.
Sure. And should we assume that Kirloskar Brothers will grow faster than the market because we are increasing our distribution network and putting out easily filling the white spaces?
Yes, well, we strive to do so, and we are quite aggressive in enhancing our footprint. So ideally, we would like to grow faster than the market.
Sure. And my last question to Mate sir. Sir, you did mention that there is some arrears in the wage in this quarter. Can you quantify that number for us, sir?
Sorry, we cannot give details more than what have been published.
Okay. Sure. Thank you so much. That were my questions. And best of luck for the future quarters.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Mahesh Pendra from LIC Mutual Funds. Please go ahead.
Okay. Hi, sir. Thank you for follow-up. I'm just taking question from the previous participant regarding the employee cost, which has grown 29% on YoY basis, where our sales are almost flat. So you said that includes both the wage.
We have signed agreements with all our plants in KBL as well as domestic subsidiaries, and our previous contract ended before we signed it. I think it ended at the end of in December last year, I think. And therefore, we had made some provisions, but those were not enough. Therefore, there was a one-off charge that we had to take when we signed the agreement in the last quarter, that is Q2.
I agree, sir. So that's the point. I mean, actually, then in that case, our margin will be much higher than what we have reported because there is a one-off in the employee cost.
Yeah, there is a one-off in the employee cost. Okay. That's what was explained a few minutes ago.
Yeah. So because our gross margins have seen significant improvement, but at EBITDA levels, margins are low because the employee cost has there is a one-time in employee cost. Yeah. Sir, regarding this Kolhapur steel, it continues to bleed. I mean, continues to make losses. Generally, we have seen foundry industries are doing well now in India. So what's the plan in this? This is the one company in our group.
Right. So let me answer that. As we mentioned earlier, we are in the process of getting pre-qualified. Our order booking has improved, but we're still waiting for a few major customers to give us that routine load that we need month on month. But certain pre-qualifications have been completed, so this should improve.
So, to explain further, the foundry needs a base load and it needs loads like what we give. The reason why Kirloskar brothers have invested in Kolhapur Steel is its ability to make exotic steel casting. While we may give them orders and some other companies may give them orders, our orders tend to be orders which are 1-off, 5-off, 3-off. But in the last few years, we have been identifying customers who can give us orders for casting, which are, repeat castings in 10s, 20s, 30s, 40s, 50s, to be shipped to them every month, and the same casting. So EBL might give at the most 3 to 5 per month, but we need a base load, and that's what we've been doing in the last 2 or 3 years, where unfortunately due to COVID we couldn't do it, but we have now qualified ourselves with some players who can give us such orders, and we've gotten the approval. Now we are expecting that they will be placing orders on us.
So currently, what of Kolhapur, the demand is made for the group? I mean, how much is contributed by the external customers?
Mahesh, sorry to interrupt you, but your voice is sounding at a distance. Could you make sure you're using the headset, please?
No, I'm using handset only, and I already raised my voice. So, am I audible now?
Little better than before, but still very faint.
Okay, I will come back in the queue. Thank you.
I'll just answer his last question. I think maybe some of our investors are not aware of the background. So, we bought this foundry in 2009, essentially to make large steel castings for certain sectors like oil and gas, power, and maybe certain subsidiaries like Kirloskar. But most of the load came from the power sector for this foundry. It was a captive foundry. But with the slump in the power sector, essentially the orders that went to this foundry reduced substantially, creating an issue there because they were not able to make their break-even points because of the lack of orders. And that is when, late 2019, we took up a GTM project where we decided that since it has state-of-the-art infrastructure, we should actually develop this as an independent foundry and ensure that it gets orders from other sectors as well, because it's the foundry business. They make large steel castings for critical applications, and it should not be dependent solely on KBL and its group companies. It should look at other sectors. And some of the sectors that we shortlisted were in the earth-moving space, in the shipbuilding space, turbo machinery, valves, and other companies like ours in the pump business. And that's what this, unfortunately though, the minute we started this project, 2020 to 2022, we had this COVID issue where a lot of the customers that we had approached could not actually make the pre-qualification audit visits to this foundry. And there was a 2-year delay in customers actually visiting the foundry to get us audited. This activity started late 2022, and it takes around 18 months to get qualified by any of these customers because the castings are very large. They expect audit. They expect us to then make certain sample castings, after which, if the sample castings qualify, then they will put us on their approved vendor list and give us certain loads every month. And that is essentially the process we are going through presently. We have been qualified by 1 or 2 customers, but that's still not enough. We are in the process of being qualified by many more customers, especially in the export markets. And once this pre-qualification process is done, we should be getting orders in the future. So it should have, in fact, more external customers than just being dependent on KBL and its group companies. I hope that answers your question.
Yeah, ma'am, I was asking this question because this is the one group which is pulling the performance of overall group. And secondly, on casting side, we have been hearing a lot about the demand, very strong demand from the international market. In fact, all the casting companies, almost everyone is expanding their capacity. So in that context, I was, this company can play a major role from, all the way losses to significant change in the profitability that can change the what numbers we are looking at at the profitability level.
Right. Thank you.
Thank you.
Thank you. The next question is from the line of Manish Goyal from ThinkWise Wealth Managers. Please go ahead.
Yeah, thank you so much. I have a few questions. First, on what Rama mentioned in the opening remarks in terms of seeing challenges on from the vendor side, availability of the vendor side for the growth. So maybe if you can elaborate on that, what kind of challenges we see, and also trying to understand that when our revenues have been flat, then what kind of challenges actually we are facing, because we haven't seen growth. That was first question. Yeah.
Right.
Are you going to ask all the 3 questions or 4 questions, or one at a time?
So, second question is related to your what you have mentioned in the press release in terms of execution of primary heat transfer pumps. I believe that is for nuclear power. So, maybe if you can update us on what is the status of tenders which have been floated for main boiler feed pumps as well as for the ancillary pumps, and are we in process of getting any orders from nuclear? That was 2 questions largely from the domestic side. And then I have probably a question for Alok in terms of, he did allude in terms of about various markets, but we could not capture a lot of things. If you can probably give us growth trends in the various markets in the overseas business. And we have seen very good improvement in margins in last 1 year. So hopefully should we be able to maintain that and continue with this margin trajectory going forward? Yeah, these are the questions. Thank you so much.
Right. So to answer your first question, in terms of the vendor bottlenecks, we noticed that there is a huge bottleneck in steel and steel system vendors. There are only 2 to 3 players in the market, and most of them are approved with all our major customers. And we are seeing a huge bottleneck there. There is a capacity constraint. Secondly, the other area is in instrumentation, whether it comes with temperature transmitters, pressure gauges, pressure transmitters, DTMS systems. Again, this is a huge bottleneck, and many of our customers now don't allow short supply. They don't give billing breakups, and therefore entire consignments cannot get dispatched because of these items not being available. So I hope that answers your question.
Regarding your second question on heat transfer pumps, these are heat transfer pumps that were made for the fast breeder reactor. They were completely designed in India. They were completely manufactured in India. There I think 2 or 3 primary heat transfer pumps which pump liquid sodium at 550 degrees, which is much higher than the pressurized water reactors temperatures that are present in a pressurized water reactor. So these were delivered a few years ago, and slowly they are being commissioned. I think it's testimony to the company's the skills of the people that we have over here, that we are one of, I think, 4 companies in the world that can make the main pumps and the secondary pumps for the fast breeder reactors. We are hoping that that program will be, once these pumps run and once the reactor is commissioned, that there will be a requirement because, as you're aware, the Government of India's program is based on pressurized heavy water reactors, fast breeder reactors for enriching the spent fuel, and the light water reactors that are also being installed. As far as the other fleet ordering, I had mentioned earlier, Mr. Goyal, that we had stopped the development of this pump. However, last year we reached an agreement with NPCIL, and we have taken up the development of the primary heat transfer pump by KBL. We are going as per the schedule that we have promised, and we hope that when the time comes for ordering these pumps, we will also be allowed to participate. As far as boiler feed pumps are concerned, again, in KEPL, we have developed boiler feed pumps. Again, the first indigenously designed and manufactured boiler feed pump for the fleet program. And we hope that when these orders are also released, they will be looking at us. As far as the orders are concerned for the fleet, they're still going very slowly, but definitely we will be participating in. Only the one for Haryana has been ordered to date, where again, while we don't have the main pump, we have part of the pump requirements in those tenders. I think it's been explained earlier that now KBL can possibly give the entire range of pumps required for a nuclear power plant, including the types of, the ones that government wants to order a fleet of. And we hope that when the orders are placed by companies, I believe it will be offloaded to EPC contractors, that we will be a participant in those tenders.
Sure. Thank you, sir. Yeah. Yeah, one question for Alok.
I mean, the other point which you asked was, what are the markets that are interesting to us? I think one market is the US. As you know, we are mainly focused on fire and water, and we've discussed why in previous calls.
Right.
So we find that, with the Inflation Reduction Act, there are obviously more opportunities there, and we're looking to see, where we can capitalize. The biggest opportunities, of course, are in pure chemicals. And as you probably know, a lot of chemical companies are moving out of Germany into either America or China. And people like BAE or BASF, etc., because of certain provisions under IRA, making it quite effective for them. But we don't have the requisite chemical pumps for America. So, that's not an excellent opportunity for us. But all the other pumps that go around those pumps, we can, of course, support. So I would say from that point of view, there are opportunities. And similarly, other areas like infrastructure growth in America for municipal water, there are opportunities in that space. So I would say that is one market that's interesting to us. The other, of course, is the Middle East, and within the Middle East, Saudi Arabia, because there is a lot of investment going on in Saudi Arabia, especially in Neom City. Last time I had mentioned that we've been getting jobs from Neom City as well as HIDC complex, which is the Hydrogen Development Complex in Neom City. So these are a few areas that we think are interesting and growing. Of course, the market, other markets like Asia, where we're located, like Thailand or Vietnam or Cambodia, are seeing a lot of inward investment. But they're assessing how much of that really would be beneficial to us directly, because some of it is manufacturing, some of it is other kinds of investments that don't necessarily need that many pumps. So we are assessing that. A specific area I mentioned in the talk is data centers. I mean, they're quite strong in data centers, so for firefighting. So that's an area that we see as upcoming. Large number of data centers coming around the world. And until now, we've been a very preferred supplier with many of the data center owners like Google and AWS and Microsoft. So I would say those are the few areas that we find are interesting. Oil and gas, there are investments in oil and gas, and there seems to be investment on upstream oil and gas. But as of now, apart from maybe some licensing being distributed, we are not yet seeing effect on the ground of that. We do see feed studies. Of course, there are more orders than there were back in 2015 and 2016 when the oil exploration was almost in cold storage. But I would say that's where things stand. Is there any specific question you had?
No, that's helpful. Maybe on the UK market, and also, are we seeing any disruptions due to the ongoing war and disturbances in the Middle East and Europe area? So one is UK market, if you can also talk about.
Yeah, so 30% of our business is in the UK market. Like I mentioned, 70% of SPP's business is outside of the UK. So in the UK market, we see the water supply business and the water business has stronger investment. There is a new SPA alliance, strategic pipeline alliance that is happening right now, which is moving a large amount of water from the northeast to the southeast of the UK. And we have been in a very good position till now. Getting most of the contracts that were on that job, and obviously a lot more of the job is still left. So that's one area, which is water supply, where we see general investment in different sectors within water supply as an area of interest to us. The other one is within the UK, we see our service business, because we see that slowly we are picking up more sites under management. We do have sites like INEOS in the north, and we have sites like British Salt, Tata Chemicals, like I mentioned, all the water companies. And slowly we are looking to partner deeper with more of the water companies, of how we can work with them, in terms of maybe doing optimization of the product, reducing efficiencies, not just by the pump upgradation, but by system changes. So those are some things that we're working on. Yeah, those things are what we're working on to enhance their efficiencies in the water segment. So I would say those are some of the key areas within the UK that we're looking at. We do see that we have some new pumps coming out in the fire segment. As you know, we've had historically a very strong presence in high-rise buildings. We've recently got a new listing on one of those pumps, which is our multi-stage, multi-outlet pump. That pump has helped us get a good presence in almost every high-rise building in the UK, and of course the Baku Plain Towers in Azerbaijan, the new World Trade Centers in America, both the Burj Arab and the Burj Khalifa buildings, and also the buildings in Southeast Asia. Now we've added a new certification on that, so we are hoping that we can see a few more markets with that product.
And last question, which is pending in terms of the margin improvement, what we have seen, do we see sustainable?
The margin improvement that you've seen, I assume you're looking at the margins normalized, annualized, because as you know, because of changes to hedge accounting, the last quarter to this quarter last year is not exactly comparable. But I would say if you're considering annualized margins, then yes, that's really what we're looking at right now. We see it seems to be okay. The US margins, I would say the US has had a little stronger level of business because of their supply chain issues getting resolved earlier this year. So their business is a little stronger than normal. So I would say the US business probably is a little stronger than normal, if you ask me that question. The UK business has more potential because a lot of jobs were not shipped out in the quarter, and they moved around. So I would say those probably negate each other. But if you wanted down to a business, I would say that I would sort of highlight to you.
Right. Thank you so much.
Thank you very much. The next question is from the line of Varun Bang from Bradston Investments. Please go ahead.
Hi, am I audible?
Yeah.
Yeah, thanks for the opportunity. My first question is for Alok. Alok, how do you see our position in the US market versus other leading players in the fire and water pump segment? How strong is our distribution reach as of now, and where do you intend to take it over the next few years? What gaps do you see at overall level, and how do you look to improve our position in the market?
Are you asking me European market in particular, or are you asking me
US
US market?
Yeah.
So the US market, we have added another 3 distributors on exclusive basis, which is Core and Main. So they're a major national distributor that we've added, and that we feel also will add to our further penetration into the market. So we are continuing our growth in the US with adding these distributors like you mentioned. We are also adding new products. Earlier I mentioned our multi-state, multi-outlet product was one product, and we got a new listing on that product recently, which would make it applicable to the US. Till now, we have not sold that product in big numbers in the US, apart from maybe a handful of buildings which were okay to take a European listing. But generally in the US, obviously you need the US listing, and now we have got that. So we hope that we can open up some new markets within the US with that product. And that product really has been one of our workhorse products across Europe and in the Far East, because it's the one that we are the only one that have that technology, where we are able to from the basement of a building pump about 1.2 miles high in the upwards, and then also have different pressure points coming out of the same pump. So because as you know, a building is divided into different zones, and we can have up to 11 zones coming out of one pump, and usually obviously the numbers change, but between 5 and 7 can be a zone, but of course it's dependent on the local legislation. Some places up to 10 stories also. So I would say that these kinds of products will help us also strengthen our network and also help us provide a better bundling solution. When we go and meet the contractors and sprinkler contractors who do the business. In fact, in India, when we introduced this product in India, just to give you a parallel example, we obviously were the only company with this product, and we were able to bundle the product with other products which are not fire products, non-fire products, and we told the contractors that if you want this product, you need to buy the other product as well. So I would say that products like these new distributors, like I mentioned, like Core and Main, and of course some tweaks we're making within the supply chain to be more cost effective, should help us get better market share in America, and that's really what we're focusing on. There are also some segments in America where we're doing direct sales, which are near the plant. So some states near the plant, we're doing direct sales, and we're doing this because one is we have the reach, because those are close to our plant, and the second is the margins are very different from distribution sales. So, but at the same time, we're not going to keep enhancing it, because America is a huge market, and really distribution is the way to go in that market. So we will be continuing on that journey, but some areas we will cater directly, where we believe that we can do a good job, and they're not compromising our distributors in any way. Does that answer your question?
Yeah. Second question is to Sanjay sir. I think given nature of our business, there will be a lot of volatility on quarter basis. So I have a broad question. What message would you like to give to a shareholder who's looking to invest from long-term perspective, given we have a global presence, and how would you define the overall opportunity landscape for the company as a whole, and where would you want to see Kirloskar Brothers 8 to 10 years from now? And lastly, what parameters would you like a long-term shareholder to focus on when he is looking at our periodic performance?
Yeah, the company is an old company, and it's a company that's been paying dividends for the last 80 plus years without fail. So I believe that it is a strong company. The balance sheet is strong, and not only does it have the widest range of products, but it also has the capability to design products from scratch in India and design products for the world from India. And that's what we've been doing. Our products are sold all over the world. It's not that only products that are made in UK or Netherlands or elsewhere that are being exported. It is products that are being made in India and exported all over the world. So this is a capability that we have, which I think is a real strength We also have stickiness as far as people are concerned. There are many people who, despite the ups and downs, have been with us for decades, contributing to the growth of the organization. If you remember, about 10 years ago, we had problems in our projects division, and we had to turn the company around to go more towards products rather than projects. And to come out with, last year, I think we came out with 206 new products across the board. I also mentioned a little earlier that we've developed pumps for totally within India for the world. So it is a strong company. There is going to be volatility on a quarter-to-quarter basis, partly because almost half the business is seasonal business, if you see it that way. We just had the monsoon quarter that has its own implications on sales. So I'd suggest that you look at it on an annual basis, see how the company performs for the last 4 or 5 years on a quarterly basis, and then reach a conclusion as to whether you want to invest or not. Because our aim is to make this, a national champion out of India. Our brand is recognized all over the world, and that is the aim that we have. We are where all our global competitors are coming, that is coming to India to make for the world. We are already here. We are present in all the trading blocks of the world. Slowly but surely, despite all the disadvantage of being an Indian brand, we are growing our market share. You talked to Alok about firefighting. I think we are now one of the top 3 players, or top 2 players in the US market as far as firefighting is concerned. So we have the ability to get into new markets, get into developed markets, and reach positions like this. Of course, each country, as you can see, has become more and more nationalistic, more and more protective of its domestic industries, and we are in a situation where I think now in every region we have value addition which is upwards of 50% locally, despite sending out of India. I think more than that, I can't give you any numbers. I shouldn't be making forward-looking statements. It's up to you to see how the company performed in the last year. Look at these things and decide for yourself.
So I think you've done well, sir. Is there a way you can define the opportunity landscape for the company as a whole, and where do you want to see KPL 8 to 10 years down the line?
Is there a what?
Hello, Mr. Arun.
Could you repeat the question?
Yeah, how would you define the overall opportunity landscape for the company as a whole, and where would you want to see KPL 8 to 10 years down the line?
We would like to see, as long as there are humans on the planet, pumps are going to be required. And that's what drives us, that regardless of whatever we do, we are going to be, our product is going to be required. It's not just hydraulics that we are looking at. We are also looking at electronics. We've talked to you about AR, VR. We've talked to you about IoT. There's actually no one in the country that's offering these kind of services, subscription services, which we've already started offering. So for me, I don't want to give a number because it's something that's forward-looking, but we will definitely be one of the biggest players in the world. That's all I can say.
Okay. Thank you for answering my question. Thank you very much.
Thank you. We take that as the last question. I would now like to hand the conference over to Mr. Rama Kirloskar for the closing comments. Please go ahead.
Thank you. In conclusion, we take immense pride in being the only company that designs and manufactures our products here in India, serving the needs of customers across the globe. Our commitment to excellence ensures that our products meet the highest global standards, be it in terms of quality, performance, or delivery. We We are known for producing some of the most efficient pumps in the world, and our dedication to innovation and quality will continue to drive our success on a global level. Having established the groundwork for our transformation, we are enhancing our competitiveness and achieving sustainable growth going forward. Thank you for joining the call. If you have any further inquiries, please get in touch with any of us or with Strategic Growth Advisors, our investor relations partner. Wishing everyone a very happy Diwali. Thank you.
Thank you. On behalf of Kirloskar Brothers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.